Hello, everyone. This is Hilda Voskanian with Keller Williams Realty in La Cañada, Flintridge. We have another episode of Lending Talk with Edwin Davidian with House America Financial. The purpose of these shows is to bring information to our audience about the lending industry and the housing market. Hi, Edwin. Thanks for joining us.
Absolutely. Thanks for joining your show again.
Hi, so we polled our audience and there were some questions that our audience wanted to know about. And one of them was, how do I know how much of a house I can afford?
It's a great question. Basically, what the borrowers should know about how much they can afford is based on three categories of information: their income, how much do they make, how much do they want to put down, and what are their monthly obligations, which is basically their revolving debts. If I make it simpler, their automobile payments, if they have any, their student loan payments, if they have any, and their credit card minimum payments. So once I have that information, then I could basically do the calculation that's called the debt to income ratio, and I could tell the borrowers how much they could afford. So for example, if somebody says, I want to buy a $500,000 house, okay, then my question would be, well, how much do you want to put down? You want to put 5% down, 10% down, 15, 20, or whatever they want to put down. That's that. And then I will ask them, do you have any automobile payments or any student loan payments or any credit card payments? So that's their liabilities. And also I have to ask them what their monthly income is. If they're self-employed, we'll take a look at their net income of their business. And if they're W-2, their gross income. So that's the way we calculate their debt to income ratio and to tell the borrowers what they can afford.
Okay, wow, that was a simple answer to a loaded question.
Well, my job is to make it simple for the borrowers.
Thank you, Edwin. So another question was,
sure.
How much do I save for down payment?
Again, save for down payment. The minimum down payment, if we try to do an FHA loan, it's 3.5% of the desired purchase price. So again, if we stick with the same example of $500,000, somebody wants to buy a $500,000 property, minimum down payment is, let's say, 3.5%. So you take $500,000 times 3.5%, makes it $17,500. So you have to save $17,500, which is 3.5% of the purchase price. So that's the amount. So that's the answer to the how much do I have to save, depending what purchase price you want to buy. So, but remember the 3.5%. Okay, that's for FHA loans, and for conventional loans, minimum down payment 5% down for the same amount of purchase price of $500,000. 5% will be $25,000. Okay.
Mm-hmm.
Now, besides the down payment, of course, each transaction has closing costs, not just the loan cost, but the transaction cost. Now, the transaction cost is based on four categories of costs. One is processing and underwriting fee from the lender. You have the appraisal fee. You have the escrow fees, that each transaction you have to have escrow, and you have title insurance fees. Okay, these we call that basically non-recurring fees, because you just paid once and that's it. So again, if we stick to the $500,000 the purchase price, the cost will be somewhere $500,000 divided by 1,000 times 2.5 equal. So it will be somewhere around maybe $4,000 to $5,000, maybe 1% of that. And then when you want to buy a property, well, you pay these costs, which we call, again, escrow, title, processing, underwriting, and appraisal fees. Well, you have some recurring costs, which is the proration of the interest and property taxes, and also the hazard insurance for 1 year in advance. So a property for $500,000, $500,000, you're talking about a closing cost of somewhere about maybe $7,000. Okay, So if it's the 5% down, which is $25,000, plus the closing cost, it makes it about somewhere around $32,000 that they need to save. Okay, but I think, was that clear? I think I've answered the questions. If you have any questions, they can call me directly. But remember, Hilda, how many transactions have we done that the closing cost, because of what you do and you're so good at this, that you were able to get it as credit towards, from the seller, credits towards closing costs, right? So sometimes they don't even have to pay the closing cost. It will be included in the purchase price. So I think that's something that maybe at a different time we can talk about that as well.
Right. No, that was a great answer. I'm glad you included the closing cost information in there as well. So do they need great credit to be able to buy a house nowadays?
Well, that's a great question nowadays. After COVID, let's talk about after COVID. Well, most lenders, for an FHA loan, they would require a minimum of 660 credit score. Most lenders. However, there are still a handful of lenders that they will still do loans, FHA loans, at 580 FICO score or 620 FICO score. But it's a handful, and of course the rate might be a little bit higher. Okay, so that's for FHA loans. But for conventional loans, again, 660 to 680 will be the minimum credit score now to be able to get a loan. Yes. So I would say it's 660. I think it's a good credit score to shoot for at a minimum. But as you know, as your credit score, if it's lower, you get a higher interest rate. So what sometimes what we do with our borrowers is that we run their credit in the pre-approval process. And if their credits are low, we have a special software that we could find out if what if scenarios, what can they do to increase their credit score, so to get a better interest rate.
Okay, that's good to know. So while they're in process of buying the house, they can raise their credit score to get a better rate within that 30 to 45 days.
Absolutely, yeah. We can do that. It takes 5 to 7 days, but call that a rapid bridge score. And if there's a way to do it, we'll do it for them.
Okay, great. Thanks for sharing that. So, what are the rates today?
You know, the rates are getting better and better and better every week. So quickly, I just want to talk about rates. Again, so conforming high balance rates, conforming low balance, which is again up to $510,000, we're looking at rates of 2.875%. Conforming high balance, which is $510,000 to $765,000, you're probably looking around that rates. And FHA low balance, which is up to 510, you're looking at 2.25, 2.25 rates. And FHA high balance, you're looking around 2.625 rates. These are, it's amazing to hear 30-year fix at starting with a 2%. And jumbo rates, you're looking at somewhere around 3.5% rates. So amazing rates. And by the way, these are rates for purchase and refis, by the way.
And these are 30-year loans.
Absolutely. And the reason I say it's rates for purchase and refi is because with our company, House America Financial, there is no distinction or difference between purchase or refis. But a lot of banks, they have that difference between purchase and refi. That's the reason I'm bringing up this topic.
I see. Okay. Yeah, I always thought refi is a little bit higher than purchase.
Not with us. Not with us.
Okay, great. Good to know. Okay. Anything else you want to add?
That's it. I think you asked, those are fantastic questions that the audience have asked. And as we always say, if they have any questions, they could call me directly or text me.
And they can call you at 818-585-8283. That's correct.
You know my number by heart. Yes, yes, 818-585-8283.
Okay, thank you everyone for watching again. If you know anyone that can use this information, please share this video with them. Give them our numbers. My number is 818-402-9923. If they have any housing questions, anything to do with real estate, buying, selling, investing, they can contact me. If they have any lending questions, they can contact Edwin. Thank you again, and we'll see you next week.